The downside of real estate is your taxes can go up. Sometimes they go down. It's rare, but it does happen. And your insurance, mine over doubled, right? We have had several policies not renew so that they can give you a new policy from a different company at a much higher rate. So that gets around that regulation on how much they're allowed to increase your insurance every year, because that's a new policy.
Mhm.
So what landlords do in rent control areas, you just kick the tenant out. Now it's a new tenant. You can set it whatever you want. Definitely embrace the lazy, but that's a topic we can't talk about on YouTube. Let's get to one we can talk about on YouTube.
Sure.
How much have the Crash Bros cost you?
Mm.
This is something that I did because of a video I put on my channel that I then took down because I kind of named a Crash Bro too specifically.
Ah.
So we're just going to be generic. Those mentally challenged midgets who put out all the content on how the housing crash is going to happen and be 10 times worse than it's ever been in history, calling for a 20 or 30% crash in the next few months, when the largest nationwide market-wide drop we've ever seen in the US was 8.9% in a 12-month period. Period.
Mhm.
So what I want to do is take some actual examples of
Facts.
facts, like
Cool.
not just, hey, hypothetical, this could have happened. This is
Sure.
what happened in
Mhm.
2021.
Mhm.
Here with my friend Matt, the lumberjack landlord, filling in for Zuber here on One Rental at a Time, while Zuber and Olivia are off gallivanting in the almost looks like Boston frozen wastelands of Iceland and Greenland, but I don't think it's that cold there.
Yeah,
Uh, Although you guys do get scorching summers too, so
we
there's that.
do. We get it all. We actually have 4 seasons.
I had to turn my air conditioning on a total of about 9 hours this year,
Wow, good for you. That was not
aggregate,
us.
like all time. It was rough. I think I'll survive though. It's frustrating that it takes me like 30 minutes to set it up. I'm gonna use it. So in 2021, let
Mhm.
me lay the carpet, the tapestry, the audible tapestry out here.
Mhm.
We had a pandemic in 2020. We had an eviction moratorium. We had a 30% stock market crash in March. That reminds me of how many times that's happened in real estate, like the crypto crash that's happening today, that Meet Kevin was talking about this morning, that just doesn't happen in real estate
Mm.
in such a short period of time. Now, give
Yes.
us over 5 years with really toxic debt, and we can absolutely have a crash that benefits buy and hold landlords,
Mhm.
because more renters means rents get driven up. Forbearance started for a lot of people in 2020, right? The
Mhm.
government, in all of its knowledge, came out and said, hey, we've made things pretty rough. We will let you not pay your mortgage. And in 2007, 2008, the peak when unemployment spiked and we had the toxic debt resetting with the, over 50%, it was like 51% adjustable rate loans hitting, we had a lot of people go into forbearance. And when forbearance ended at that point in time, you had to catch up that year.
Mhm.
And so a lot of people couldn't, and they went into foreclosure. It was talked about in 2021 that this was going to repeat itself. A lot of people were going to go into forbearance. And in a year, so 2022, the end of forbearance would happen. People wouldn't be able to catch up. Unemployment was going to be the end of the world, and that was going to cause a lot of foreclosures. Now, were this the case, foreclosures can often take up to 1,000 days. And if there's a lot, it might spike down to 500 days, but you're still talking over a year for that to happen. So that crash actually starts to impact the market in the end of 2023 if everything starts to go really fast. So in 2021,
Mhm.
knowing forbearance was about to end, I purchased a duplex. Matt, how many properties did you purchase in 2021?
I think 12, maybe 13. It was a lot.
Right. So you have a much larger portfolio, much more active. With me, I wanted one property every other year when I started. It sped up towards the middle. And then since I've retired, it's been one every other year so far. And I retired in 2022 because of the massive crash that didn't happen. But in 2021, I purchased a duplex, and it was about $400,000. I negotiated, I offered four, list price, got it, and I negotiated $2,500 off with the inspection. So choose one of the 12. And we're going to talk about purchase
Sure.
price, what's happened since then. I'm also going to add another layer with, I said, real example. The duplex across the street from mine was for sale, an identical layout, exactly the same price, same seller. I was not in a position to buy two, and I tend to not do more than one transaction at a time. I'm the lazy guy. I'm not looking for a huge portfolio. I want the right amount of cash flow from the least amount of units.
Yep.
So I recommended a friend buy that duplex. He was in a position to buy it. He had more than the down payment, more than the reserves, had been asking me how to get into real estate.
Oh, good
So
now.
some of the details of one of the purchases of your 12
Mhm.
team from 2021.
Yeah, so we had so it was ironic because today I literally just got a bunch of numbers back on a portfolio loan that we're doing, and in looking at that portfolio loan, uh, the vintage of most of those buildings was 20 and 21. But what's really interesting is so there was a threeplex that I bought. Um, it needed some work. It was definitely a project, but I bought it for 250 and I figured it needed about 75,000 bucks worth of work. And so I bought it for right around 250. Did the 75,000 bucks worth of work. And so I'm locked in at a 4% rate on that asset. I did I funded the construction myself. I could have gotten a construction loan, but I didn't. But I funded it myself, and so balance on it was about 200 and so it was 20% down at the time. So balance on it was about $200,000. And that building now generates, from a rental perspective, that building generates about $7,000 a month. And
So before we get into what happened since then, uh,
sure,
really quick, again, the purchase price,
250 plus 75K in renovations.
75K. And that was your purchase price. And what was your down payment? You said
Down
20%
payment
down.
was 20%. Yep, so it was
So you were
50
out of pocket how much?
50. Mhm.
50 plus
Yep,
renovations.
yep,
And the renovations were again
75.
75. So you're 125 in.
Oh,
Okay.
yep.
Mine's very similar. And it was a 400 purchase, negotiated down a little bit. I did 25% down because this was an investment property, not a house hack,
Mhm.
in a small town of less than 500 people. A little town called McKenna, Washington. It's itty bitty, but it has several economic drivers within commuting distance, so it meets my criteria of in the market I'll purchase in. With the down payment, closing costs, and the little bit of immediate repairs I did, I was in for about 109,000.
Okay.
So that was my out-of-pocket total purchase price. Now I'm same thing. It was a little less than 4%. I didn't quite hit the 3% I did during the refinances of 2020, but I was under 4% on the mortgage. I think the mortgage there at the time, because it's gone up now, because they don't stay the same. You have the downside of real estate is your taxes can go up. Sometimes they go down. It's rare, but it does happen. And your insurance, mine over doubled, right? We have had several policies not renew so that they can give you a new policy from a different company at a much higher rate. So that gets around that regulation on how much they're allowed to increase your insurance every year, because that's a new policy.
Mhm.
So what landlords do in rent control areas, you just kick the tenant out. Now it's a new tenant. You can set it whatever you want. So you're 125 in, I'm 109 in. You're cash flowing, you said 7,000 a month now,
Yep, 7,000, right around 7,000. Yeah, right around 7,000 bucks a month.
gross or net.
That is the gross.
Okay.
The net is the net is a little over 4,000 a month.
So 4K a month.
Mhm.
And my gross is like 45, 44.50 or something like that. So we'll say 4,400. My mortgage is 1,600. So whatever that math is on that, people get our other video we're doing today is, are you too focused on cash flow? That rental meets my criteria of it's profitable.
Yep.
And other than if I was going to do a personal financial statement or make a video on cash flow, and I'm going to use a bad word here, I have no freaking clue what it actually makes. It's a good enough asset to own. That's it. That's as much thought goes into it.
Horseshoes and hand
So
grenades.
what's that?
Horseshoes and hand grenades.
Horseshoes and hand grenades, right? And yeah,
Close enough.
I add another one to that, but I won't do that here. Not on Zuber's channel. We'll keep it clean. So proud of myself. So thousands of dollars a month in cash flow since
Yeah.
2021. Okay, that's the first part. That's the part that we see. Now, you did a better strategy than me for your situation. You have the team, the crews, the knowledge to do the work and the repairs and the maintenance.
Yes.
I purchased a place, and I was trying to think of the repairs I did. The light in the driveway wasn't working. So it was like, I think it was $100 handyman to go out there, really ran a whole new wire. And to get that, couldn't figure out where the short was. So he just tied a wire, slid it through, did a whole new wire. And then the garage door on one side didn't line up right. So there was some adjusting to be done. And that was like
Mhm.
100 something bucks. I think I spent $200 or $300. I did have a tenant turnover on that one. Finally, that was a young couple that bought a house. I put in about $700 in blinds, had carpet on stairs restretched. So I have spent a total since I've owned it, maybe $2,000,
Mm.
maybe.
Yeah, that's awesome.
Uh, and it's taken this much of my time in
Right.
those years, right? So our strategies are different. But a lot of people think of cash flow. Let's look at what the Crash Bros have cost people. My
Wow.
friend could have bought the one across the street, and maybe he didn't negotiate the 2,500 off. He would have bought it for 400. It was identical, same year, same everything. It probably would have needed probably even less work because it looked better than mine as far as some small things went. Uh, so he's missing out on thousands of dollars in cash flow profit after setting aside for repairs, maintenance, and vacancy. It still averages around $1,000 a unit for me. Tax free, right? Even though I invested that 109, you invested 125. How much are you getting to depreciate?
Oh yeah, all of it. It's
All
a
of it, right? The cost of the buildings, right? The value of the buildings. So
Mhm.
I'm depreciating significantly more than the 100,000 that I invested, which is writing off much more than the thousands of dollars that I'm profiting every month.
Mhm.
Tax free. It's
Yep.
it's just it's nuts. Now, what's the appreciation like on this property?
So bought 250, put 75 into it, so I'm 3.25 in. It just appraised, literally the appraisal was came out today and it appraised for 761.
All right, so you only doubled. That's 112% increase. But yeah, uh, terrible. Sorry, this crash has happened to you,
In
man.
3 years.
It's been 3 years though, so it
In
didn't
three
happen
years.
overnight, right?
Right.
So significant wealth doesn't happen overnight, but it does happen over decade.
Sure. Exactly right.
So mine was 400. Appraisal came in at 400 when I bought it, right? I negotiated a little bit down. I did a personal financial statement. I'm considering, because I'm house hacking my current duplex. I don't know if this burr I'm going to pull the money out. I don't know if I'm going to sell and use the IRS 121 rule and take several $100,000 and go buy another place, because I have a $500,000 into it basically, and it's gone up to like 7 or 8. So I don't know what I'm going to do. But I was just doing personal financial statements, so like a loose review of comps of all of this, and mine came out, bought for 4. It's been 3 years. Redfin, Zillow, all those estimates say it's like 620, but a conservative estimate was 555. So I went lower to say, okay,
Oh, that's light.
I've made 150,000 in 3 years in appreciation. And
Mhm.
yes, the 620 and everything might be accurate, but I like to go conservative because there's a cost of selling. That's an
Sure.
investment property. I don't get the IRS 121 rule. I'm going to have depreciation recapture. I'm going to have capital gains tax. I'm going to have a cost of selling, right? How much would it cost to sell? 8% or so with agent fees and possible repairs I might have to do to satisfy whatever the buyer wants. So I'm always conservative on my numbers. I put 100,000 in, 109. There's over 150 there that would be mine, right? So I've doubled my investment money, more
Mhm.
than doubled, and have a couple $1,000s a month in cash flow. Now, my friend had the money,
Oh.
but at the time, he was set to buy. He actually asked me, "Hey, come over, let's have dinner. I want to figure out how to get into this real estate stuff." And he's that close a friend, right? He doesn't watch my YouTube stuff. He just knows I invest in real estate, and that if he asked for help, I would come and help, right? And so I show up and I explain, and I said, "This is what I'm paying. Here's how the math works. This is why I like the area, right? It's right behind the base, so the more rural side of JBLM, a larger military installation. It's commuting from the capital, from Tacoma. You've got tons of economic drivers. I go through the whole thing. I say it's a side-by-side unit. Garages are in the middle, pet-friendly fenced yards, washer dryer hookups in each unit. Great neighborhood. He's familiar with the neighborhood. So it checks off every single box except large population." And he
Mm.
lives in the next town over that's not big either, so that wasn't an issue for him. But like the Roadrunner and the Coyote, our other friend who is an investor comes zipping in, meep, meep, And he shows up, and now he has 30 rentals and he's retired off rentals. But he points out all of the Crash Bro videos, and he specifically articulates forbearance ending. And he said, look, I have 30 rentals. I don't know what's going to happen. All of these people that are going to be coming off of forbearance is going to flood the market. Property values are going to tank. All my renters can go buy a house, and I'm gonna be struggling. So he paints this really good auditory tapestry of the world is ending, and my friend doesn't take action. He still has the money in the bank.
Mm.
He's spent most of it RVing on the weekends because he's one of those guys with the $300,000 RV and the $120,000 truck to pull it. And since you have it, you might as well spend $300 or $400 every weekend going out to be in your RV. But he still has the money for the down payment to go buy his first. Doesn't own one yet because he's waiting for the crash. 3 years later, 3 years of no cash flow, 3 years of no tax benefits, 3 years of no appreciation, not doubling his investment. You did this one deal as a breakdown, and people are like, wow, he took, $325,000 property, doubled the value. You put this much money in, you've got $4,000 a month in cash flow. You just 12 or 13 deals that year. This was just one of them.
Just
When
one.
people ask, how is wealth caused in a recession? I don't think that so I don't know if I've thought this through to an articulable thought, but I don't think the recession causes wealth. I don't think the opportunity is in the recession. I think the opportunity is in all of your competition thinking there's a recession coming.
Yeah. Yeah. I mean, we're counter cyclical. When everybody else was going nuts and buying a ton of stuff at 6 and 7%, we were way back. We were just doing the math and saying, wow, mortgage rates were 6%, were 5.5% a very little time ago. And now they're 4 and 3 for other people. It's the cost of money. It's what does money cost? And all of those properties, the problem is I took advantage of the inefficiency of the system, which is I knew that people were like, oh, my house is then probably worth about 400K. Just by the math, it's worth 5. I bought so many properties with so much equity in them because people couldn't do math. They weren't smart enough to do the math. That's why I believe 95% of agents are morons. Because if they had just done the cost of money math, they would have been properly pricing assets, and they weren't. They were all on discount and all on big discount, 20% off. Rates went down 30%. Why did properties not go up at all or went up a fraction? Then everyone's like, I can't believe what people are buying these for. I can't believe you can't do math with how low the rates were and how low that payment was. The payment on that house today, I'm doing this so I can this is part of my ploy of how I will show everybody that I am getting a free house. Free and clear, no debt on it. I am getting a free house. I'll show how I do that in the video, but this one is a catalyst for that. When you properly invest, when you understand what you're investing in, and when you can do just simple math and recognize, to your point, you weren't beating up the spreadsheet. I wasn't beating up the spreadsheet on what's this going to yield tomorrow. It was like, no, horseshoes and hand grenades. This looks like a good deal. And over the next 3 to 5 years, it could be an amazing deal. But the best part is the kicker that's not even listed on that deal is I have a vacant lot right next to it that I can actually buy density in to develop. I can build an 8 unit on that lot next to it. That lot can't be valued because it's just raw land. It has no approvals. It has no plans. It has none of that. So the appraiser looks at it and goes, well, that's nice. You just have a bigger lot. However, as soon as I get it appraised, as soon as I get it subdivided, as soon as I do that, now that lot has massive value, hundreds of thousands of dollars. And this is what people can do if they just recognize that you have to do the work. You do the work and have a friend like Dion who will come over and sit at the table with you and tell you how to do it. But yeah, your buddy, I mean, he doesn't do mortgages. He clearly doesn't review rental applications. If he did, he would have seen people's income and debt at the time. Wasn't an issue.
And what I love about this is you can do 12 or 13 deals in a year. You can manage and fund the rehab. You have the bandwidth to do this. You know that lot's there.
Mhm.
I buy one property. This is how amazing you have to be able to do real estate. From the MLS, with a conventional loan, less than a couple $1,000s in repairs in 3 years. And if I had a vacant lot next to one of my properties, I'd probably wonder if I could set a hammock up over there. That's about the amount of work I would be doing in this.
Yeah.
There's a whole spectrum of how to invest in real estate or how to invest, period. And you and I are both on the spectrum, and we're far on different ends. And both strategies work, right? What is your goal? Does your strategy get you to your goal? Take something that I do. Don't take a lot because I'm way too lazy. Don't copy too much, but take something Matt does. Right? How to streamline the process, how to optimize, how to, the best things to actually update in your place to get better rents. Like all of these strategies, how to market yours. I've actually learned I don't want to use all of your advice on marketing my properties because it's too much demand. Like I this last one, I had my brother there for an open house turnover. Like I wanted, because one of my strategies is when I show a property, I want my applicants to all come at the same time.
Yeah, absolutely.
Now
True.
their perception is they think it's because I'm creating demand. No, what it does for me, since I own small multifamily, my existing tenants are also impacted by me placing a tenant. I
Yes.
want to see in real time how the applicants interact with other people. And then
Yep.
that is actually a part of my criteria for who gets selected to be the new tenant. And I used right out of your course the strategies of, because I used to do listing like an owner,
Yeah.
right? We think in square footage, age of building, maybe school district, some other things. No, it's these are the things that matter to an applicant. Why not speak to that in your listing? And man, it's just so much attention. Got to filter through how many applications and people there are for that. So thanks for doing this, Matt. If people want to reach out with questions on uh, how not to get ripped off by the Crash Bros in the future, how can they find you?
Lumberjack Landlord, YouTube, Instagram, Thursday nights, tomorrow, Thursday nights, 9 p.m. Eastern time. We do it. And we got a boot camp starting in a couple of weeks. So I'm excited about that. But yeah, it's sad, man. Think about how many people's lives didn't change the right way, you know,
No, and they're the ones at most risk as a recession's looming.
for sure.
So
Yep.
that $4,000 a month in profit you're getting on that property, everybody's like, well, somebody might not be paying their rent because they might lose their job. Like half of the tenants could not be paying their rent and you'd still be above water.
Exactly.
Thanks for hanging out with us here at One Rental at a Time. I hope Zuber is having a trip full of amazing.